Hi guys, this is Mark Shawson, the Pattern Trader. For the past year or so, the US dollar has been in a quiet uptrend. Now, it's been a little bit deceptive because in the last 6 or 8 months, the US dollar has gone into a bit of a sideways slumber, but it is ever creeping higher, especially against the euro and the Aussie dollar. Also being affected, and I think will eventually be taken under, is XAUUSD, which is spot gold. So I think all of these trading instruments are susceptible to going lower by virtue of the higher dollar, and a dollar that seems like it's creeping higher and looks sure to go even more higher. Right now, we're sitting at the low end of a several month trading range, certainly against the euro, where we're trading around the 112 area. This has been a secondary support area under a long-term weekly and monthly head and shoulders bear formation. So any meaningful penetration under the 112 area will very likely lead to lower levels. Now, we are in a bit of a low volatility, non-trending environment. So even if we take a peek under the 112 floor, we might snap back. But this is going 3 steps forward and 2 back in a lower direction. And ultimately, it feels like the euro is heading back to the 105 and ultimately parity, 1-to-1 with the US dollar. Now, this could take obviously several months to play out. But that's where things seem to be headed based on the long-term price patterns. One of the pairs that I really like on the short side is the Aussie dollar. The Aussie dollar has fallen since 2015, about 4 years ago, of a price of about 95 cents to the current level of around 71 cents to the US dollar. Now, it has just been sitting doing nothing. But eventually I do expect this pair to succumb and go lower and perhaps to the low 60 cent area by the end of this year. Now, one of the pairs that we've had a little uncertainty with is XAUUSD. This is gold versus the US dollar. And with the stronger dollar trend, it does look like gold is starting to succumb. I sent out an email to our members last week to get short at 1311. We're trading about 250 pips lower now at the 1288 price level. I do have another order out to get short under the 1285 low, which was the low of last week. And I do see that this is rolling over. Gold could not penetrate the ceiling of the last 5 years around 1340 to 1360. We had another shot earlier last month and it failed again, and now we're sitting under 1290, and gold looks like it could roll over in a hurry. So again, I think that this creeping dollar trend where we see the US dollar going higher is continuing, but it's doing it at a snail's pace, so it's kind of doing it very insidiously, very deceptively. And so the way to trade this is not to dart in and out like a squirrel after some nuts. Is to take a look at some big to take a look at the big trends and just look at riding them over the course of the next several weeks. The way to do this is to keep your positions smaller, keep your stop loss wider, and hang in there for the long trend, because the daily movements just aren't enough to justify getting out of some of these pairs. So that's the thought for the day. Again, it looks like the dollar is the way to go, and all of these pairs look like they are going to succumb to the stronger dollar. So with that said, I wish you a healthy and prosperous trading day, and I'll speak to you next time.